Still?
Sure. This is not climate risk, this is IT risk.
There it is. It came.
Thank you very much for this opportunity to present. I would like to thank the Hellenic Swedish Chamber of Commerce for picking up such a very timely and important issue as we are already in climate change. And the core of the presentation is to give risks but also opportunities for several financial as well as market participants in several countries, and but also economies and sectors. We have seen that there are many initiatives, global but also European, the previous speakers have referred to, that drive change when it comes to climate, but they also drive capital. And we just want to show with this slide the trillions that we are talking about now, that we're going to finance climate change, adaptation and mitigation. But it's also about identifying opportunities, especially in the long run, that companies can benefit from. Only the Sustainable Development Goals, and we're talking about just two of them, number 7 and number 13, about climate action and energy, $1.4 trillion need to be motivated to achieve these goals. The Paris Agreement to achieve 2 degrees Celsius temperature increase has triggered about $65 trillion US dollars, according to the International Energy Agency, as well as the Green Deal, the EU funding mechanism now that we are going to see the impacts of the investments, as the previous speaker referenced. We're going to see about 1 trillion over the next 8 years, which is approximately $250 billion every year, capital flows into investments about climate. So we're talking about billions and trillions, and we want to make sure that the financial as well as market participants and businesses are all aware of these developments. When it comes to regulation and policies, and I want to stick to a couple of slides on this, it becomes then apparent that really now the change is happening, because when we leave it to voluntary schemes and initiatives, then we don't see a lot of change. But when this becomes regulation, especially for large companies, then the action is faster. There is already regulation, and we're talking about the mandatory requirements of disclosure of companies about climate change metrics through the Non-Financial Reporting Directive. And that's affecting not a lot, about 5,000–6,000 companies in EU, about 100 in Greece. However, with the new proposal of the Commission to extend the scope of this directive, soon enough we're going to talk about 60,000 companies in Europe that they need to report climate-related information and how this affects their businesses. This is very important because, along with social and governance, also environmental issues, the so-called ESG metrics, we need to be disclosed by companies. And this is very interesting because climate is becoming now an investment, but also a credit risk. This is now also depicted in financial market regulations, and we have seen now companies and investors, in order to benchmark themselves for the investment returns and performance, they are adopting climate transition benchmarks, and these are all happening based on regulations. Investors are also requested to disclose on their websites how they address and integrate climate risk into their investment decision-making process. Financial institutions like banks, insurance companies, leasing companies are now requested to address ESG metrics, especially climate, into the lending activities and portfolios. It's also important to know that a new regulation was in place last year, the so-called taxonomy regulation, which actually defines what is green. And guess it, yes, right, the first 2 definitions were about climate change adaptation and climate change mitigation. So we have delegated acts of the European Commission telling us what is regulatory definition for climate change, and especially green. Is a train green? Yes, if it consumes less than 50 grams of CO2 per mile traveled. So for every piece of activity, for at least for the largest ones, we have a definition on the impact on climate. Now, if we get all this in one place, we need to see how companies now need to go from risk metrics and identification to some sort of an operational efficiency before they move on to reaping off the opportunities that this low carbon transition will bring. Low carbon transition, but also circular economy transition. These are the two sides of the coins that we're experiencing to the shift from the linear economy. But also companies, if they don't address climate risk properly, they will lose the license to operate. The regulatory fines and compliance will be hard to meet. Also, not to mention the reputational risk when it comes especially for stigmatized sectors. If there's one thing you should remember from this presentation is this slide taken from the Task Force for Climate-Related Financial Disclosures, and this is actually how we can quantify the risks, but also the opportunities when it comes to climate. On the left-hand side, you see that transition risks as well as physical risks that companies need to have in mind now when they do business modeling and forecasting and planning. So I need to think of legal and policy risks. What about a carbon tax? We saw from the previous presentation how the ETS credits rise. How am I going to embed this into my cash flow statements over the next 2 to 5 to 10 years? How my assets and liabilities are going to be affected based on these new policies, new consumer behaviors, right? What is there going to be a reputational shock in my consumer behavioral? So there's a lot of things that now companies need to take into consideration. But also physical risks, as we experienced from the storms, that we need to take into consideration about infrastructure. Are we going to have stranded assets, right, in our portfolio because of sea levels rising, or about some extreme weather events, right? On the other side, are we taking advantage of the opportunities? Are we making sure we implement energy efficiency metrics? Are we making sure that we identify the consumer trends and preferences so we can offer climate-friendly products and services to the market? Are we increasing our resilience, right, based on these projections that we do? So the investors now, as well as the bankers, are interested in quantifying this information into traditional mainstream financial accounts. This is why we see more often than not companies producing environmental profit and loss accounts. They are endorsing shadow carbon pricing, making sure that the liabilities are there on the balance sheet. And they are produced in reports that are also submitted to regulatory authorities as well. A couple of case studies to show the case. I have a few examples from several industries. I'll start with the banks. Banks are going to be the mediator for capital inflows into climate change products. Here you can see a Swedish bank that they're actually now submitting to principles for responsible banking. They're also endorsing the taxonomy into their products, making sure that they count the beans when it comes to which products, which clients are green. Also, we're talking about board members now in banks like are accountable for measuring and monitor carbon risk. They also have here a model for customer sustainability classification. So they classify their clients according to their climate risk, and then they price the interest rate based on the risk level of their clients. In the asset management sphere, when we're talking about asset managers or asset owners, they finance biodiversity. Biodiversity is going to be heavily affected due to climate change. And they want to make sure which clients are impacting heavily on biodiversity. They also produce sustainable finance products for their clients. Either this is institutional investors or retail investors, making sure that they finance climate-related objectives. They all now have a methodology for Paris alignment. All investment portfolios and banking portfolios in the near future are going to be aligned with the Paris Agreement objectives. They also have internal models like ESG star strategies, where they classify the clients accordingly, making sure that they manage climate risk appropriately. Going now to corporates, the case of Volvo is the best example. They endorse the initiatives that I just showed you, like the task force on climate-related disclosures. They publicize, the corporate sustainability assessment by Standard & Poor's, making sure that the consumers, as well as investors, bankers, lenders, are aware of their initiatives. They measure the footprint on the carbon footprint utilizing the carbon disclosure projects, and they communicate that. They also endorse circular economy models, making sure that materials are again used into the production line. Last but not least, they calculate carbon footprint, making sure they measure the baseline and where they want to be. And in order to do that, they endorse initiatives like the Science-Based Targets Initiative, because you need now to show to investors and lenders that you employ best practices for measuring a climate risk. Additionally, we can see the integration of other technologies like blockchain technology into climate change, because we want to make sure that we identify and capture climate all across our value chain. Another example is H&M, to another industry. Again, they have committed to international initiatives when it comes to carbon, like the Green Consumption Pledge Initiative, when they actually disclose how performance on circular economy and climate change is done. 100% pledge for renewables. This is actually something that we see from many companies that are actually sourcing energy from renewables. They have internal tracking systems like the e-Track-It, where they actually improve traceability of products. They have the Circulator, which is actually a very interesting tool, making sure how products, but also suppliers, can contribute to circular and low carbon transition. And last but not least, they have a funding mechanism. They have their own sustainability linked loan framework, where they actually can get money from the markets. This is just a few of the examples that I want to show you. Climate change is now becoming a very interesting topic for business modeling, but also funding. And we've seen a lot of interest from investors, bankers, but also corporations in this continuous transition to tackle climate change as an issue. Thank you very much for your attention.